You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's blog gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/blogs today to sign up for regular updates via email. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. It's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-compelling, at least we hope so, Options Insider Radio Network. Quite a few programs you guys to sink your teeth into. If you listen to this one, you probably know about VolView, so well done. A lot of great archive episodes. If you are indeed new to the show, I encourage you to sink your teeth into those. If you really want to get your meat into all sorts of your teeth into all sorts of meaty volatility discussions, then that's pretty much the place to go. Many archive episodes, years worth of great episodes for you in there. You can dig in, pick your poison. You want to go back, look at maybe when Brexit was popping off or multiple election cycles. They're all in there. Great guests, Nobel laureates, all that fun stuff. You know how to find it, theoptionsinsider.com, where, of course, you just grab it, search for VolViews in your podcast provider of choice. Of course, you already listened to this, so you may not, but you may not know. We do have the full network as well, and the easiest place to find those other 14 programs, just types Options Insider Radio Network into your podcast provider of choice, and then it all comes up, all that goodness, and you can subscribe right there, and then bam, you have all of it, and then you're just never going to be bored for options content. That's our promise to you, our pledge to you. We give it to you free, and we give it to you so that you're never bored. You're never wanting for options content if you subscribe to us. So we'll keep you busy at the very least. And of course, while you're listening, of course, those of you can join us live every Friday for VolViews, noon Central, 1 p.m. Eastern via Mixlr, MIXLR. We love you guys too. And of course, you can always listen after the fact on your player of choice, including our mobile app available for all the big platforms. We do love to hear from you guys too, so hit us up. Questions, comments, insights, pearls of wisdom, all that good stuff. Hit it up by the app or via social media or email, questions at theoptionsinsider.com. However you like to reach out to us. Believe it or not, we do actually like to hear from you guys, so hit us up. It makes the show fun. It makes it easier to pass my time with these knuckleheads if I got you guys writing in, giving us some questions. All right, speaking of the knuckleheads, let's see who we got on our knucklehead crew. Let's start. I think we're mixing it up a little bit this week, going all the way out to the shores of this fine nation where we have plucked someone from the sea. He was in the midst of pulling up his lobster cages, and we said, nope, time to talk some volatility. He is none other than the rock lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, how you doing, sir?
It's a sunny, lovely day here in Knuckleheadville. I guess that's what we call it now, Knuckleheadville. Since you knuckleheaded me right at the beginning of the show. We didn't even get past the opening. Unbelievable.
Yeah, the umbrage flies fast and hard on this show. And I don't know. Actually, now that I recall, he did mention he was heading out to a conference. So I actually don't know if he's joining us. Let's see if he is. Mr. One day, hopefully soon, Dr. VIX, Mr. Russell Rhodes. Mr. Rhodes, are you there? Are you joining us today, sir? I see him on there. Mr. Rhodes, can you hear us?
He's changing his glasses, I think.
I don't know what's going on with him. He's there, he's not there. But he did mention, as I got an email from him last minute, that he was going to a conference out there. So we'll see if we can add him in for his pearls of wisdom throughout the show, listeners. But it may be a bit of a challenge. I think, he mentioned he was going to something about big data, I believe. He wants to learn how to mine big data when it comes to volatility. So we'll see if we can get some of his insights in throughout the show, listeners. His connection may be a little sporadic. Those conference venues, not exactly notorious for quality reception, but we'll see. We'll do our able best as we keep on rolling right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. This is, like the man said, this is the portion of the show where we talk about what the heck is going on from a volatility perspective, and there is quite a lot going on in the volatility realm this week. VIX just flirting with all sorts of lows and then rallying and all sorts of fun stuff as we record this and stream it live noon central right here in the one true time zone, right in the middle of the session here. VIX catching a nice little second wind here. VIX Cash up almost 3/4 of a handle or so, right around 1082 right now. So all of you percent of a percenters, the math is pretty easy these days. It's about 7%. And, of course, most other major indices kind of unched on the day. S&P off a little bit. Qs and the Dow pretty much almost, the Qs almost literally unched. And the Dow up slightly. So everything's kind of trying to pick their poison today, but not the VIX. The VIX is in rally ho mode. But weird stuff nonetheless. Of course, that wasn't the story earlier this week. No, not by a long shot. That's where we saw VIX pretty much hitting historic multi-decade lows. I know when it hit 950, it was a 24-year low. I'll have to go back and see exactly how far back it goes when we hit 9.19. Yes, I said that correctly, listeners. 9.19 on the open on the 25th. That was actually got as low as 9.05. Excuse me. On the 25th. So that was just impressive all the way around. And then, of course, we followed that up with some even more impressive action. Kind of vacillating all over the place again on the 26th, where we actually broke the 9 handle intraday, getting down to 884 intraday. So who the heck knew what the heck's going on this week? It was crazy cakes. I'm sure Mr. Rock Lobster. I apologize. I should never insult you like that. Mr. Rock Lobster. I'm sure this meant for a lot of frenzied action over there in the pit chat, a lot of hand-wringing as to what the heck's going on out there in VIX land. So I'd imagine you had a lot on your plate this week. Why don't you detail that for us in your volatility review, sir?
Well, one thing I will say is, don't you find it amazing that the vol, it cashed in a low on Thursday? And literally, I don't know what happened, but all of a sudden there was massive surprises and there was gnashing of teeth, and there was what was it? Was it Amazon? Remember we discussed this yesterday. Was it Bezos became the richest guy in the world, and nobody liked that? They didn't like that very much.
Yeah, it lasted about an hour.
The meatball today. I was talking to him for a little while, and some fun guy bought a bunch of puts, Goonlock or something like that, in the SPX. JP Morgan, there was more stuff about, massive short interest in VIX is going to cause all kinds of, short vol futures is going to cause all kinds of problems. So, I mean, literally, for a weekend review, mostly just vol slid down. The market kind of slid up. Earnings were pretty good. And then, we have Amazon earnings last night, but they started selling off ahead. So it's weird. It's almost like the big funds, the big banks are saying, you've got to dump all your, tech. Didn't we have this like 3 weeks ago or 4 weeks ago or 5 weeks ago when all of a sudden all the Qs got hammered? it's because everybody said, oh, these are getting toppy. It's almost like the big banks want to buy, come in and try to find a good reason to scoop up some QQQ type stocks. But today, good Intel earnings, not great Amazon earnings, but Amazon was down, I think, almost 40 today. Now it's only down 20 at one point. So from a vol point of view, we did have that kind of absolutely crazy where the market goes ballistic, the markets get super wide, and nobody knows what to do. But I'm looking at it, and I'm saying VIX Cash got to, it moved quickly from 925 to 11 and change. So that's a big relative move in the future. That's a 1.5 point move in the future. So all those moves are relatively big. But still, there was all this chaos, and the VIX was 1110 or 1120. So, it's what I call in zone one. It's in the bottom quartile. So it's hard for VIX to get out of there and stay out of there. And as of today, I think, what do we get? We were able to crank out a small decline, but other than that, not much else. Just and I'm looking at it now, and you're looking at VIX in the 10 handle, and almost 11 really. Is this going to get sustained? And I don't know. There's some earnings are still pretty good. So there seems to be the veneer of some kind of crack up coming, and I'm not quite sure. It doesn't look like, the GDP number was, okay this morning, I guess. So there's a veneer of volatility under there, but we can't quite break through the surface. Can't quite break through the surface of it. But the one thing is vol is so low, it's easy for it to come back up at this point. That's the biggest thing.
Yeah, we certainly are seeing that. So all people who've been betting against this aggressive upside move, you're not looking too good. And of course, we were talking on a show last week. I'm not sure if you heard it, Mr. Rocklauser, but all of a sudden, a lot of these bets were starting to come in that we hadn't seen in a while, that were betting on some aggressive upside moves. So who knows? If they kept their powder dry and kept calmer heads, then maybe they're not looking too bad right now, even though it's kind of just a retracement back to where it was. But still, it's better than a continued downside move, I'm sure, for a lot of those guys out there. Speaking of what you were talking about before, I was going to say this for the listener mail, but you mentioned it, so you might as well talk about it now. You're talking about that article, I think it was out of Reuters, with this gun locks double line capital. A big headline. They buy SPX puts. It's a weird article. A bunch of people asked us about it, talk about it. That's why I wanted to bring it up, including, let's see here, Gabe Rich. He said, this is a weird article. No word on the amount, and I'm assuming 5 months means D's expiration. Now, I'm with you. The article is weird. It kind of reads like they just called up this guy and we're talking to him, and he said, yeah, I bought some puts. And that's kind of what the article was. He says he purchased some 5-month put options on the SPX a couple of days ago, as the VIX fell to its lowest levels in 1993, et cetera, blah, blah, blah. So yeah, he bought some. And we don't know when, we don't know why. 5 months, probably decent, but you never know. I don't know if the writer of this article is too familiar with options, or they just they couldn't get more specifics out of this guy. But I don't know why this was a headline, but apparently it was, and it caught a lot of people's attention. Gunlock goes on to say, we lost money on the first day of the trade, but now we are doing great. This is like free money. We are in a seasonally weak period for stocks. More importantly, we think that the VIX was really, really low. So the S&P puts are going long volatility. So he used this as a proxy to get himself into some low vol. We can understand that, even though Mr. Rock Lobster, when's the last time you heard buying out of the money S&P puts 5 months out was like free money? It's a cash printing machine, sir. I don't know if you knew that.
I guess at 9.1, he just figured you can't go any lower. So. Anything can work for a while. I guess that's the isn't that the law? Any trade can work for a while. And at 9% vol for VIX, you pretty much have zero Vega risk that I can think of, but you're still buying out of the money puts 5 months out. So you need the market to help you a little bit. Actually, a lot of it. But if he makes a ton of money on them, I guess it's a buying opportunity for the rest of us. So we'll We'll see.
Now
I thought that was kind of funny. Free money.
That is pretty good. Now you have a title for your new next webinar. Buying puts is like free money. So there you go. What can go wrong in that scenario? Repeatedly buying out of the money S&P puts. No one's ever gone broke doing that in the past, sir. So interesting stuff out there. That one kind of caught our radar too, as just kind of being a weird, why is this an article? And if you're going to write this up, at the very least, give us some specifics to it. What the heck did he buy? What strike, which month, how many? These are the kind of the basics you might want to know if you're going to profile this guy's amazing, earth-shattering SPX long vol, long put trade. Interesting stuff. I do wish Russell was here because he did have a headline come out today. I think it's a misprint, though, from the Tribune saying the CBOE is going to get a new open outcry trading floor, even as frenzied trading declined. I think it was a misprint. I think they actually meant to say the Board of Trade, CBOT, which shows how much even the Chicago papers understand about the legacy of exchanges here in the city, which is to say not so much. But I don't expect CBOE to be doubling down on floor space anytime soon when they can't fill what they already have. But Russell would be a good one here to answer that question. Maybe we'll have to answer him next week. But we mentioned, of course, VIX Cash has been eroding, and now, of course, rally ho mode. That means VVIX getting a little bit of sign of life. VVIX hovering around 90 right now. We know it's got this kind of recent range of about a floor of about 75 on the downside, and once it gets north of 100, things are rocking and rolling. If it gets up to 125 or beyond, then things are really moving. We're certainly not quite at that level yet, but we're getting a little bit more elevated, which is warranted. We just talked about how much velocity of VIX we've seen over the past few days, hitting historic new lows and then turning right around and hitting rally ho mode yet again. And of course, not to be outdone, our old friend, the VIX of NASDAQ, which if my system will cooperate with me, there we go. Also getting a little bit more juice to the bones there. It was trading about 17 a few weeks ago, came off quite a bit, got back to around the 14 level. Now getting a little bit more juice, as you might imagine, as Mr. Rock Lobster alluded to. A lot of that juice coming from the NASDAQ these days. Amazon and others really lighting it up for earnings season. We'll get to those in a little bit here on the show at about 16, almost 16 and a half, 16.35 out there in good old NASDAQ land. And of course, all things Skew. Let's see how those are lining up as well. Skew index, a bit of a mixed bag sometimes because it shows you quite literally a mixed bag of things. It shows you the call wing and the put wing and kind of lumps them together. But it is getting a little juicy out there as well. Maybe puts not quite so cheap, despite what our friend Mr. over there at Double Line thinks. The Skew index almost at 141, so getting back up there again after adding about 10 points, so almost 11 over the past week or so. So things getting a little bit bottom heavy, bottom rich, shall we say out there. But of course, we can't necessarily intuit that, so we have to dig into that. Look, stay tuned to TWIFO in about an hour or so. We get into all things Skew with that quick Skew tool. It's really been kind of fascinating. Let's get into the futures a bit too. I know, Mr. Rocklopster, this is one that's really been on your radar this week as well, because it's been fascinating to watch. We were talking not that long ago, probably 2 shows ago, about how the AUG contract was pushing to set new lows around 1220 and 1221, and now that all seems quaint in hindsight. So a lot of things have changed in the past few weeks, including this week. So tell us what caught your eye out there in the ever variable VIX futures these days.
One is we had the VIX. We also commented on the contango value, just the value of the future premium. That's the cash, the future over the cash. The future traders try to charge a premium for that. Stayed 2.25. It was staying kind of high there. Wasn't really going away. And now we know why, because VIX Cash marked up $1, and the futures have moved, but not a ton. So those are important factors as far as the futures absorbed a lot of our current move. I would say the SEP is kind of cheap right now, at just barely $2 over, and August is barely $1 over. The August 02 future is, I'm going to, again, 30 cents over, kind of probably fair. So what happened was VIX Cash moved up, the futures absorbed what I call the first pass in volatility, and now we're kind of sitting here. Everybody's sitting waiting for something to happen. But if you're because a lot of people are trade the UVXY and all stuff like that. So the actual levered vol products yesterday had quite a little swing. UVXY yesterday went from 28.5 in the morning to $33. So that is 3 and 1.5, $4.5 at what is that? A 15% move in about a half an hour. Just went straight up to the moon. So there's still, those products can still move when the futures move. So when you're looking at trading those things, and that'll be a subject in our webinar tomorrow, vol moves in a certain nature. So if nothing's going on, vol is, it's going to continue to kind of just sort of slide downward. But as soon as you have some action or the potential for some actual, underlying movement, because of the electronic marketplace now, they hit a button and vol goes up 2 points or 3 points, like bang, 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 and you have a global jump in volatility, and all of a sudden the markets get real wide and things go and things get ultra wide. So, the nature of these products, especially when you're trying to execute something, for our listeners that are trying to execute vol trades, is you also have to be careful about when you execute stuff. You don't want to try to buy some UVXY calls when the thing is in the midst of a tough rally, because the markets get super wide and you're going to get just awful fills. So I think it's usually best to trade them when they just start to just start to move higher, if you're interested in being long those products, because once they take off, it's too late. Of course, we have different little strategies for entering those types of trades, but looking at the movement, the nature of vol now, it's so low. It goes from no vol to some vol in the blink of an eye. So also too, for vol traders, if you think, okay, I'm gonna try to pick the bottom in vol or UVXY or something like that, you need to have offers out ahead of time, because you want to let the market sweep through those offers if you have a blast. Because if the run in vol is not sustained, you are not going to be able to get a sale off. So you got to be careful trading the products or using them as an investment, or however. I don't know if I could say UVXY as an investment, but you have to be careful on how you manage your entry and exit into the product. So right now, the August, I'm just going to say, because we had some positions in some of these that we were able to get out of some call spreads yesterday. Right now, the market is 7 cents wide in the August 31 call. Yesterday, when vol was blowing up, the market was $2 wide. It was like, what was it? It went to like 310 at 450 or something like that, almost $1.50 wide. So as far as trading those things, you got to make sure you have offers scaled in, ahead of time. That way, when the market does something, it will trip through it will trip through and give you a good fill, and then you'll be happy if the vol comes back down again. So I thought the nature of the products now, because of electronic trading and because liquidity providers, the ability for the algo guys and everybody else to lift offers quickly, all of those markets literally simultaneously just become not there. And they get so wide you can drive a truck through them, and that's the liquidity provider saying, whoa, we're not going to be 500 up right now in the midst of all this madness, or 1,000 up or 2,000 up or anything like that. We're just going to put some markets out there and let's see where things go. And if you're crazy enough to want to fill right now, well, tough toenails for you. So I just wanted to mention that to viewers that are interested in those products, or VXX or any of them, to be mindful of the liquidity in the products when you see some of these hyperbolic rallies in VIX or VXX or UVXY, any of these. And on top of this, there was more notes here. We were talking about XIV for a while, and XIV is trading at what's it up 70% this year, something like that.
Yeah, it flirted with new contract highs. This was like a week ago, like 93 half or something. It probably hit past those. It's still flirting near those levels, but yeah, it's setting new highs almost every time you look at it.
So, and you forget that XIV holds a lot of short future contracts. So because of margin, if, the VIX doubles, they're out of money. Or if the VIX futures double, theoretically, they're out of money. So the guys that are running that product can actually just kill the product. They go, okay, we're going to cover our futures and we're going to just declare the product dead. So theoretically, a product like XIV can go to zero. Even though it's $93 today, it can go to zero tomorrow. Also SVXY. So, these products get very, they get very enticing when they're up here. I just think overnight risk with them is a lot bigger than people imagine. There was one drawdown this year that was pretty substantial. I thought that was worth mentioning. But, you see the fact that, oh, wow, this is up, and then the contango is just going to keep rotting away, and they're going to keep going straight up. And yes, they can go up for a very, very, very long time. But I guess when we had a couple of those Trumper tantrums things, we had an $82 to $67 move in one day. That was a pretty substantial move. Just recently, we had an $86 to $73 move, so that's $13. So a move of over 10% in a day. If you think about it, for the futures to move just $1 now, that's just about a 10% move or close to a 10% move. So all these products are going to mirror that. So, now that XIV is 90-something bucks, you got $1 move in the future, $1.20 move in the futures, and all of a sudden that thing is going to move huge, especially on the downside. So yesterday the range was 96 to 89. So again, about a little less than what was that? Let's call it an 8% range yesterday. So they can move very quickly on the downside. So, volatility settles, they come back again. But I would just, caution listeners that have seen the amazing and quite fantastic rally in UVXY. Let's see, from basically $49 to it was trading. It's down $1.80 today, so it closed over almost $95 yesterday. To be mindful of the fact that these things can get totally smoked out of the water. There are kinds of tricky trades that you can do and buy VXX against your XIV on a ratio, different types of things like that. Those are trades that kind of work. They can give you an embedded call in VXX because you're only going to lose so much in your XIV, and then your VXX positions will do really well. But again, that was what I would call a total market meltdown trade. So interesting trade here. And also, again, just for listeners to be mindful of, these products are seductive. The inverse products are seductive when they get this high, and they've been doing so well for so long. And it's because we have had, I think, we have had a historically low realized vol range in the market. Just isn't doing anything. I think Mr. Schlesinger would say, what a great time to sell options. The market's not doing anything. And right now he might be saying, well, maybe I'm a little less excited if the market starts to pick up again. So, and, to be honest, the only thing that I could think of that really has changed this week is maybe how everybody's looking at the Fed unwinding their balance sheet. It feels like the market rallied pretty far on the Fed filling up its balance sheet. And I'm not quite sure how we're going to pay the piper as the Fed tries to unwind the balance sheet. So I think still, since that policy is so massive relative to everything else, not quite sure how the equity market's going to take it. Maybe fine, but then again, you have the Europeans trying to do the same thing. And they have all-time low rates over there. So maybe this would be the best time for them to get rid of all the stuff they have on their balance sheet. But still, those are, I think that is a characteristic of VIX now, more so in the past, that because it's so low and we have this kind of grinding market, which is good for investors in general that own stocks. We kind of grind up, but it turns just on a dime. So gaps in volatility are going to be really severe, I think, from this level. So I think that is going to be a feature of how vol trades moving forward for the rest of the year, which means if you're going to ever buy vol products, like a long UVXY or VXX for however long you are, you want to make sure, especially if you buy the options in them, you want to make sure that you have kind of offers scaled up to close, because you want that whole trade to be self-closing when the market rips. You just want it to trip through all the offers and get filled. So we shall see. But anyway, that is the one thing I've just noticed about volatility in the last, I would say, month or so, which is slightly different than how it has been trading up till now.
Yeah, it has been, a crazy run. You just outlined, I think, very well the pros and the cons of, there's been this exploding ecosystem, this exploding universe of VIX ETPs, your ETNs and your ETFs. And it's been great for a lot of people because you can come in and literally get now pretty much whatever flavor of VIX you want. If you want levered inverse, if you want to go full bore long, if you want to get the near term front portion of the curve and play there, wherever you want to do, you can do it now in the VIX universe. But the flip side of that is you get some products out there that when you start reading into the weeds, and I think your buddy Bill Valentine, who was on the show a few months ago, he kind of made a similar point about some of these ETNs out there, the notes that have some really dubious things in their prospectus. And certainly you mentioned, of course, the inverse could have a similar issue because they are heavily short. And we get one of these moves that the VIX is prone to do, it could leave quite a dent. So yeah, people sometimes dive headlong into these things without really, perhaps being fully aware of how these products work or how they function. And so there's a lot of rope out there in the VIX ETP world, but there's pretty much just enough to hang yourself sometimes. So be careful of that sort of thing as you navigate these products. Can we get so many questions? Maybe we should do a whole show one day about comparing and contrasting various VIX ETPs out there. We've often joked about VXX, but I think you're the one who calls it predictably crappy. But that's actually kind of a good thing. What you're getting kind of with VXX. You're going to get this long-term erosion. We could debate here endlessly kind of why that erosion occurs, and we have. I'm going to table that debate for a while because I'm kind of tired of it, but quite frankly, people have written in with all different terms of speculation as to why this thing erodes. We all know it erodes. Let's just gather around that fire and be happy. But that said, it's something you can predict, and buying long-term puts is one of the more set it and forget it type trades out there. Speaking of VXX, Mr. Rock Lobster, I would like to pick your brain on this one. It's kind of funny. I throw it out to your cohort there, Mr. Meatball, every week, and he reliably gets it wrong, which is a good sign, actually. VXX right now, right around 11.5, 11.40 out there. If you had to guess right now, without cheating, without looking at the show notes, because then you'll know. But if you had to guess right now, we just talked about it. We talk about it many times. How this long-term erosion of VXX is one of the more predictable things you can almost set your watch by in the marketplace. So that in mind, if you had to predict what the number one position out there in VXX these days is, what's the big hot option position, much more than anything else out there, what would you say it is, sir?
Oh gosh, dang, I hate this because I don't look at the show notes, and then I'm going to look like a dope when I guess wrong. I am going to guess the 15 calls. You know what? Actually, no. I think it actually is. It's probably like maybe a 6 or 7 level put in Jan 2018 or 2019, something like that.
That is the right answer from a right guess. It's not the right answer overall. No, it's completely wrong. But it's what I expect from you, and that's the right guess that a normal person should guess. Because, quite frankly, if you asked me that question, I would probably guess something similar because that's the right play for VXX. That's how you should play it. Putting aside when Ophir was on a few months ago talking about selling his upside verticals in VXX. That could work too, but not for the kind of size we're talking about. But here, no, guess what? The number one position order of two, actually the top, I'll give you the top two. Number one are the VXX AUG 13s, near in the money. Followed by the SEP 16s, number one and number two, Mr. Rock Lobster. So near term.
My next guess was SEP 15.
Near term upside calls That's fine. You know what's funny about the AUG 13s? They're about 100, almost 170, almost 180,000 open on that strike. About 60 odd thousand of it came this week. Someone bought a size vertical out there, AUG 13, 15 vertical in VXX this week, about over 60,000 times. So someone's loving their near-term upside here in VXX, which is kind of interesting. And I wouldn't, and if it is a hedging vehicle, I don't know if near-term VXX upside is the way I would go to hedge my upside exposure, but maybe someone is feeling that. I'd choose other products, I think, first before I went that route. But still, an overall 1.4 to 1 calls over puts. So calls outnumbering puts, even though we talk all the time about the use case for long-term puts in VXX. Near-term calls. Ruling the day. What say you to that, sir, Mr. Rock Lobster?
All I can say is the price is right. 60 vol is not much to pay for them. They are, well, that's at the money 60 vol. They're paying 90 vol for those. And the reality is, what does it? I guess the good thing with upside calls is you're really depending more on the vol and VXX blowing up than anything else. So, I mean, yesterday we had a massive $1 rally, and those calls probably picked up some value. But I mean, you need things to happen. You need VIX to be, 13, 14, 15 bucks, some sustained movement with VXX at this level to make those, what I would say, make them like a life changer. So you're paying right now 40 cents for them. To make them worth $2 or $3 or something really fantastic, you need a crap ton of move for VXX. And I actually I could calculate what that move is right now for you. I have a little sheet that calculates all that stuff magically. So you and I think would need the August future at 14. Yeah, you would need the August future at, let's see here, at around 14, and you would need SEP probably 14 and a quarter. That would give you a 1330 VXX. So 1330 VXX would give you plenty of kick. You would probably get a double in those calls because what are they, about 35 deltas or something like that. So just to give you an idea what the relative move has to be in VXX. So these are 20 delta calls, so you would pick up 20 cents per dollar. So they would be worth about $1.25 if, and this is what you need, you would need VXX. You would need VIX Cash to go to at least $14, maybe more, to make that happen. So it's giving you an idea of what it would take to actually make those calls move. So I would say is that kind of trade to me is sort of like a disaster play where somebody is probably long a lot of equity exposure and they're just buying those, and that is in case you get a parabolic move in volatility or something, they're covering themselves. So because every day you're going to lose about 3 cents a contract on those unless the futures are moving up. That's the reality.
Things are rocking and rolling when 40 minutes into the show we haven't even really discussed VIX options yet, but things have been moving. That said, we probably should share that your little VIX spreadsheet with the world, or VXX, spreadsheet out there with the world. I think a lot of people who are trading VXX could benefit from actually knowing where the VIX cash is, how much of a move they need, and where the futures need to be in order for these ridiculous VXX calls to actually pay off. So maybe we could do a service to the world, sir, Mr. Rock Lobster, and share your VXX spreadsheet.
It's a client thing, but it's a thing for clients of Option Pit. So we try to actually make money on some of the stuff that we do.
Oh, that's just give it away and it all comes back to you tenfold, sir. Haven't you heard that one? That's that old saw. Speaking of things that are lighting it up this week, here we are getting to VIX options. A lot going on this week, listeners, for us to get into. But yeah, it was an active week in VIX land as well. The mothership printing a ton, doing about 600,000 here towards the last quarter of the show here so far today. ADV, we're at about 657 right now. So having come off a little bit, was 7 and change a few weeks ago, have come off a little bit, but it still was a pretty active week. Thursday, 926. Wednesday, hitting the 1M mark, 1 million pretty much almost exactly exactly. Tuesday about 733. Monday the laggard still putting up serious numbers, 560,000. VIX just doing numbers that most other options would pretty much kill for. Still about 3.9 to 1 calls over puts, which means Mr. Rhodes, if he was here, would still be a little nervous, would still be dabbing his brow with sweat because he's plus threes when he starts getting nervous. Me, I don't care to like 6, but 5.5. Say 5.5. But he gets nervous around 3 because he's a silly fellow. But that said, he's not here to defend himself, so we can say whatever we want. All right, moving on to what's hot was lighting it up this week. Mr. Rock Lobster, I'm sure you saw this big print going up this week, and it's colored our list as a result. It also shows how active VIX has been lately, that all these names in the top 10 with some serious numbers. We got all the way down to number 7 before you break through 300,000, which is high. Some weeks you've had, the top 10 could be, a couple 100,000 all the way up into like top 2 or 3. So this is a fairly active time in VIX land. Number 1 with a bullet are the OCK 25s, 578,000 of those bad boys. We'll get to what happened there in a little bit. Number 2 drops off exactly 200,000, 378,000 of the AUG 30s. Number 3, the AUG 20s, 374,000. Number 4, the ever optimistic AUG 35s, or pessimistic, I suppose, depending on your viewpoint. 322,000 of those bad boys taking up number 4. Number 5, SEP 20s, 306. Number 6, the first and only put on our list, the AUK 12 puts, 303. Yes, 300,000 even of those AUK 12 puts lighting it up. So AUK just storming onto the board this week with some interesting stuff going on. We'll get to why those puts are there as well in a little bit. Number 7, the AUG 17s, 300,000. Number 8, about 299, just a tick under 300,000 for the AUK 15 calls. Number 9, the AUG 12s, 282. And number 10, the AUG 15s, the seemingly sane, level-headed AUG 15s, 238,000. Total of about 10.4 million, about 8.3 or so on the calls, and about 2.1 million open on the puts. Mr. Rock Lobster, I'm sure you know why AUK invaded our list so aggressively this week. Yes, there was a crazy size print out there in VIX land, VIX options this week. A lot of articles you probably saw. People were quote-unquote shocked by this VIX bet, this huge VIX bet. Some people calling it the largest bullish wager in living memory on the VIX. I don't know if I would go so far, but again, that's why I like Mr. Rhodes to be here. He likes to weigh in on these historical context of these trades. But what we saw pretty much was a size AUK risk reversal going up. It was the AUK 12-15 bullish risk reversal going up. Paper selling the 12 puts and buying the 15 calls, doing it 260,000 times. So that alone is pretty aggressive. And then just to add some flavor, maybe he felt like he could sleep too easily with that trade on the way it was, so he wanted to add a crazy upside kicker / short units. And that was, of course, the AUK 25 calls that he just blasted out to the tune of 500,000 of those bad boys. So all sorts of crazy size, crazy funkiness, easy for me to say. And then the upside kicker is kind of funky to boot. Mr. Rock Lobster, I'm sure this one came across your radar. You guys probably debated it intensely over there in your chat room. What's your thoughts on our friend here just lighting up the board in October with the risk reversal? And that wasn't enough for him. Doing 500,000 contracts net in that trade alone was not enough for him. He had to turn around and then blast out 500,000, another 500,000 of the OCK 25s to boot, sir.
It's one of those ones where when it's because the October trades it looks like it's slightly in the money, buying the 12-15. So I'm still trying to figure out exactly how this trade was set up, because I remember seeing this in the Wall Street Journal, and I'm. Oh, so the 12-15. Okay. Now I see. I guess they're just saying they're gaming where they think VIX will be, that won't be basically down here. Which is, I have to admit, I'm not the huge fan of buying out of the money options in VIX. And I think that's kind of the biggest problem with this one is, he's buying an awful lot of upside, that if we just kind of went sideways, it's going to produce a lot of unhappiness, I feel like. Don't you think? I mean, if you get an 11th settle, what happens to this trade? And that's not even, totally out of the realm of possibility. So unless he's using this delta to sell futures against or something like that, which I think that certainly could be possible, which would make it a little bit more interesting because the thing pops, and then he'll sell some futures against it, and he maybe trade some futures against the position. That certainly could be possible. But, you look at this and you say, there's some heavy dollars in it. It's all out of the money dollars. And it's also, long call short put in the money. So it could be really it could be quite a poop sandwich unless we get a pretty serious pop in volatility. It's really leveraged to the upside the way it looks like.
Yeah, it's
buying 15 calls, selling 12 puts, and then jumping on, and then jumping. I guess he's getting a little bit by selling some of the 500, the 25s, but let's just call it. It is an interesting way to trade it. That I find, it's an awful lot of in the money value for VIX, settling anywhere under 12. It's just not it's expensive. It can be really expensive.
It's got a lot of weird angles to it. It's expensive. It's got that crazy upside leg. So if you do get up there, you're right. It is upside skewed. But then it gets, at a certain point, if we get the crazy town, it gets kind of ugly. I got to assume this guy's long some futures, something else against this at this point, just because, if he gets up there, he doesn't have, those puts are in the money. You're right. But he doesn't, those are OC. So it's got some time for those to work in his favor. This thing is all sorts of weird. You're right. And it's, I'll have to dig in to see if this truly is the largest bullish VIX trade in living memory. I'm not sure how they're calculating that. If they're going by net units or if they're going by somehow some sort of notional value on the trade or what it is. You'll never see these histrionic titles. You have to take them with, I think, a few tablespoons of salt, quite frankly. But that said, yeah, this is all sorts of funky. I think we're going to have to take some time to sit on this one a little bit. And you're right, if it does sit right, speaking of sitting, if it does sit right here, this one doesn't look too great. So yeah, it's all sorts of crazy town. And if we do start flirting with these crazy historic lows again, also doesn't look too great. So this is an interesting trade. And also interesting, this kind of fits into the narrative. I don't know, maybe, are you seeing this too, Mr. Rocklobster? We talked about this on the show last week, where for a long time, every trade we saw, we joked about it. I think your cohort there, Mr. Meatball, was joking about how everyone and their grandmother is just piling into this short VIX trade, and it was true. And then it seems like almost last week, and in the last week and a half or so, that narrative has flipped a little bit. Even before we saw this VIX, rebounding off these historic lows, we saw people starting to pile in. We saw the return of the short 1x2, which we hadn't seen pretty much all year so far. It kind of went away because it just wasn't a favorable setup for that anymore. We saw that come back. We saw size upside bets, putting aside even this crazy nonsense. But even before that, we saw it seemed. So it did seem like maybe the worm was starting to turn. What do you think? You think that's just convenient hindsight is 2020, or you think you're starting to see that as well?
Everybody piled into the VIX trade because it was working. It looks like, unbelievably, the Qs are going to be up today after Amazon didn't, I'm a little shocked. I guess Baidu up is 10%, which is, I don't think that's in the Qs, obviously, but I think they were piling. People have figured out they piled into the trade because there was a sustained period of, just the market wasn't moving. It was going up. And even, the biggest action was kind of the weird tweets coming out of the president. And after a while, people got used to it. And now, we did have a little backup in vol. But again, this to me, it still feels like it's trading very much like the 90s, where there was kind of benign conditions. And we're sort of riding, everybody forgets that, before 2007, the market, or 2008, if there was a little bit more common sense about loaning to people who couldn't pay it back with the housing. you could have seen a much different story in 2008, and there was the liquidity crisis. But the Dow or the SPX was what, 1600 or something like that, or 1500 prior to. So, I mean, the level we're above there is not a massive level above, the prior peak. So a lot of trade in the S&P 500 through the last 8 years was just getting back to where we were, through 2013 or 14. Then we started making new money or new highs in equities. So, and right now you're into that point where kind of it's a longer bull market, but it's a bull market from a very low bottom, almost historic low for the S&P 500. I mean, relative to where it had come from. So now when, there's not a huge, there might be a lot of noise in Washington, but as far as global economic policies, they're all kind of on autopilot. They tried all their QE ideas and they don't really work. So it slowly seems like they're abandoning sort of the big policy fix, which was actually gyrating the market a lot more than. So those are big differences where a lot of the noise you see is just small and sort of, kind of nonsense noise out of Washington, as opposed to, we're just going to start buying $1 trillion worth of bonds, right? That stuff moved the market, where we had volatility on the upside that was almost as devastating as vol on the downside. So those types of big pronouncements, we just haven't seen stuff like that in a while. And that helps damped volatility. And people kind of figured out, well, if they're not going to do that crap, then vol's going to stay lower for a while until whatever this, business cycle starts to wind down, or companies aren't making money. But every time we turned around, technology companies were making money hand over fist as they kind of figured the whole internet thing out. So I think there's just a confluence to make realized vol go down, and that was the right retail trade, and it still could be the right retail trade as long as there's premium in futures. They're going to erode unless there are real reasons for vol to go back up. So, if the central bankers, and we bitched about this for 3 years, well, why do they keep doing this QE? Because they're just going to have to get rid of these bonds at some point. But the market liked it because you couldn't fight it. And I think the big question will be, and the question we had this week that I thought was the biggest shudder of all, was the reality that bond selling might come back. To be honest, I just have no idea how equity prices are going to absorb that. Maybe we start and then the ECB starts doing it 2 years from now, and they kind of spend 5 years getting out of the whole thing and, pretend that it never happened. So we'll see. But that's where the shocks and vol are going to be at this point. There's still the governments, when you think about it, caused the biggest shocks and vol because those policies, they're kind of like one-shot all big policies that change things. And we haven't, at least from what you're hearing out of the White House now, you're not really kind of seeing, maybe better tax policy. They obviously can't do anything with healthcare. So there's not that vol catalyst, let's say. And we just haven't seen it. So, until something more earth-shattering happens, I think we'll get, these small, like I said, small rips in vol. Everybody looks around, they're saying, well, nothing's changed, and then the vol's going to go right back down again. Until there is a reason for it to change.
Speaking of vol catalysts, earnings certainly are that. Look at it. Show's almost done. We haven't even gotten to earnings yet. There's so much to talk about this week. But there was a lot of earnings popping off. I know a lot of you guys like to get your vol game on during earnings season, slinging a lot of single names, and you had your choice. You had your pick of the litter this week. Let's go in reverse order. Amazon, the big one, popping off last night. They were pricing in close to $50, right around $50, so a little around 4.5% to 5%, depending on where you're looking out there. So they closed right around 1046, so 1046. And we asked you guys ahead of time. We said, what do you guys think? $50, is that cheap or is that rich? And about a third of you said, I'll buy that $50. Tie for 27%, saying you're going to sell that or he seems fair. So I guess about over half coming in on the this is not a bad price or a little bit aggressive on that end. And then 14% says you're holding out for Apple. The third of you said buy that. You know, it's kind of hard. This is a dubious one to break down because you can kind of take both sides. Right now, Amazon hovering right around almost 1030, 1028 half. But it's been quite the saga in between that. So net, you could say, yeah, you're doing all right if you sold the premium. But of course, there's two ways to play these things when you're talking about long, short premium on these trades, long, short vol on these straddles. Is that one is the net move, but of course, also you need a nice little back and forth can do it as well, particularly if you're adept at gamma scalping. And you had a lot of opportunities to do just that out there in Amazon today because it opened up right around 1,012. So off about $34. Still not the move you needed, but a good sizable move. And then it dipped down as low, just flirted with breaking the 1,000 mark, got down to 1,001 even actually, and then just rebounded right the heck back. Said taking right about 1028 right now. So if you were adept at some of your scalps, you're actually looking all right on this one at the end of the day. But that's kind of what it takes. That's why we say it's so hard to trade long premium effectively through earnings because you need to really be on your game to do this stuff effectively. And Amazon was certainly a challenging one. It could have worked both ways. If you were a patient premium seller and you got out right now, you're doing all right. But it was probably an aggressive night, popping a lot of tums, and some people choose not to trade that way, and I could certainly see why. We also had Facebook popping off earlier this week. Their volume was off the charts. They were putting up VIX numbers yesterday, pushing almost 1 million contracts. They were pricing in about $7.50 in their straddles, right around 4.5% as well. I think we talked about this on Option Block yesterday, Mr. Rocklobster, that 4.5% seems to be the magic number this cycle. Everyone's pricing in 4.5% straddles out there, and Facebook was no exception. They opened up nearly $9 the next day, so blowing the doors off there. Trading up as high as nearly $10. So net, it was all one-sided paper. It wasn't a lot of vacillating around. So premium buyers clearly winning the order of the day there. Chipotle, a bit of a mixed bag on that one as well. They were pricing about $23. They were comparatively rich. They were about 6.5%. Stock opened up about 2%, but then again, getting back to that gamma scalping, then turned around and plummeted 15 handles from there. So you had a net 15 handle range. Still not enough to make up that 20+ buck straddle, but you did a little better if you could be selling the top, buying the bottom. We all know how easy that is to do. So a lot of action, but still probably not enough to put a smile on your face if you bought that bad boy. And of course, earlier in the week, the one you guys really seemed to be fixated on was, of course, good old Google, aka Alphabet. They were pricing in about 4%, so a little bit cheap compared to the others, only 4%. They were trading right around $9.93. We asked you guys, hey, what was that a good deal? You said almost 40% said buy that. 4% was cheap and was interesting, but it ended up not being perhaps the net buyer you needed to be. Stock dropped about 2%, opened down about 2%, drifted down about 2.5%, but still not enough net for that bad boy to pay off. So, Mr. Rocklaus, there's been just a crazy week, not just from a broad VIX perspective, but of course from a recent single name earnings perspective. Of course, Amazon's probably pride of place. What are your thoughts there on Amazon and your probabilities there as a gamma scalper, if you were pretty adept at it, as well as maybe some of the other earnings that caught your eye this week?
As far as, gamma scalping the earnings, that is possible for Amazon. Actually, I think one of my clients came up with the best idea. They had a short-term fly, I think, which probably it's probably stuck the max value or close to it, which is pretty amazing. And then he used that fly, and then we looked at pricing upside. So I think that as a trade for Amazon worked well. Not something I would normally do, but you don't spend a ton of money on that one. As far as the tech earnings go, they're pretty good. I mean, they didn't like Google revenue, but it's kind of right where it was. They liked Microsoft last week. Intel was great, but for whatever reason, Intel is still, I think, in everybody's brain wedded to the desktop. So until they can convince everybody they are going to make more money on, servers and stuff that support the web and mobile. And that's the next thing. A lot of the mobile, we'll see how Samsung blew the doors off of earnings. Didn't quite make the list, but it's important because they make all the crap that everybody buys, the screens, the chips, and all that stuff. And that stock is starting to catch a little bit of fire as well. But huge earnings, probably think bigger than Apple even, which is enormous. So I think the next big one really will be NVIDIA. So all that stuff all the mobility stuff is still getting people interested. So, and we'll see how many dollars that can generate.
There it is. There's our music. We're up against it, Mr. Rock Lobster. We got to go. We're done. We flew through this show. Crazy how fast an hour can fly by when there's so much to talk about. We do got to give you our quick crystal ball, too. So we'll kind of do a combo. What's coming up at the option pit as well as your crystal ball prediction. Really quick, looking back at last week, I was the winner. I was about half a handle away, 10 1/4. That was the closest. Mr. Rhodes, oddly enough, was on the low end. He picked 976. Mr. Meatball splitting the difference there, going 10.04. So 10 1/4 gets me the win. I'm going to choose to go first this week. I like at this vol levels, but I'm not. Even though I know what we're talking about earlier with has the worm turned in VIX. There is certainly a lot of positioning to that effect. So I do worry about that, but I still think near term there's not enough realized juice to stay in this level. So I say we're going to give up the ghost again and drop about a handle back to 975. Mr. Rock Lobster, what is your crystal ball pick, and what's coming up in the land of the pit, sir?
All right, I'll sissy boy it, and I will split the middle. So what did you say, 975? I'll go 10 1/4.
You infamous carper, you. The carper, you carped on the P-Coast, you carp on the CBOE, you're just carping across the globe, sir.
Hey, listen, you learn to carp, you learn to carp. All right, that's the deal. We have our Gamma for Free class tomorrow. It's funny, people send me notes. Longo said we can get your class for free. I'm like, wait a minute. The idea is you get your Gamma for free or near free, and then you let the market move. So that's our class tomorrow. Go to optionpit.com/events and sign up. But maybe in the future there will be all kinds of lovely things to happen on our website coming soon. More stuff besides that.
I think just that one guy who wrote in, that long-time listener, I think his name was Ron or something. He gets something because he had that great question. He's been listening forever. So give the man something. I'm going to give him some nice gear. You at least give him a free webinar or something. But the rest of them, I don't know. They're probably just freeloaders. Who knows? Tell them to prove their worth, prove their merit. They're just piggybacking on, I think, Ron or David, I forgot their name, his goodness. But unfortunately, we got to get out of here, listeners. We're overdue. Stay tuned. If you're in the chat room, stay tuned. Go get a beverage, relax, come back in about 25 minutes. Because if you like all this index vol talk, we're going to do a ton of it on TWIFO. Going to dive deep into Russell. Going to dive deep into S&P. Of course, crude lighting it up this week. All sorts of vol talk coming your way on that side of the fence in about 25 minutes. Stay tuned for TWIFO. If you can't make it, if you're not listening live, we love you guys too, and we'll see you next week for more Volatility Views.
Volatility Views is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's blog gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/blogs today to sign up for regular updates via email.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.